Horner joining us to take us through the charts today. Here to take us through the trades, Jason Brown, stock market expert at thebrownreport.com and the author of 5-Year Millionaire. Great to have you both with us. Jason, we've got a nice green day to close out the week here. We've got a new Fed chair. We've got peace. I'm crossing my fingers there because it hasn't been signed yet. What are your thoughts here on this market action we're seeing today?
Yeah, so we got the holiday trading short week here, and with the market sitting near all-time highs, even though it's slightly green today, it's bigger than it was yesterday, we're still having an inside day. So I'm bullish, but I'm cautiously bullish at these all-time highs, but we'll take it. We got good news with the peace deal, or at least the discussion to be discussed of the discussion of the peace deal. And so we hope that manifests into something more material and long-term, and we can move past this.
All right, that's more caution than I usually hear from you. So interesting take there. All right, let's dive into the big three here. You've got Cummins as your first pick. My second day in a row talking about them. They got their upgrade yesterday from Wells Fargo. We saw a really nice pop on this name. It's continuing to move higher this morning. So take me through your thoughts here.
Yeah, so what I like about Cummins is most people know them for their diesel engines and trucks and buses and heavy duty equipment. So they're pretty much known for making the engines and generators and power systems that help moves goods across the world. But recently they announced a partnership with Circle Energy to supply natural gas generators for AI data centers through 2030. And what that does is it gives them a growth trajectory and an opportunity to participate in this AI boom. And they don't have to be a manufacturer of chips. I've said this before on the show that the picks and shovels play is the people who are the ones that provide the energy and infrastructure to the ones who want to create the chips, as well as the ones who want to build data centers that people can run the applications on the back of. But I love that Cummins doesn't have to sell their product or service or build the best software. They can help support the people that want to do that. So I love this path of growth for the company. And then technically speaking, I know he's going to get into the charts, but we got a nice W pattern bounce off the 50-day moving average. The stocks appears to be breaking above its 52-week high. So I see more upside from here.
All right, so Kevin, as we look at the technicals here for Cummins and knowing they're positioned at a part of one of the potential bottlenecks or a solution to one of the bottlenecks in this AI build out, what are you seeing here as we look over the long-term chart?
Yeah, I think Jason's right on the money. I mean, the weekly chart is certainly giving this optimistic viewpoint here. Now, I see the bull flag running up from basically 515 or so horizontal support coincident with the 20-week moving average on this 3-year weekly. Now, what stands out is the potential for that target to be achieved. Ballparks to 785 with a conservative target based on drawing that flagpole from the bottom of the flag in lieu of the top of the flag. Traders, you have the option of either way, right? You draw from the bottom, you're more conservative. You draw it from the top, you're a little more aggressive, essentially. But that's what we're kind of thinking about here on the weekly. But if we go into the daily, it's going to look a little bit more constructive and a little more casual as we break to new highs. Now, if you're looking to manage risk here on the daily, some traders are going to watch the 715 ledge, of course, but the 50-day and 20-day confluence of the moving averages can't be ignored here from a trend standpoint. So if you're a trend trader, eyeballing the confluence of those two moving averages seems to make a lot of sense as well.
All right, Jason, so we've got that bull flag that Kevin just highlighted there. I know you've got a bullish trade here, so walk us through the trade and how long your duration is on this one.
Yeah, so on this trade, I'm looking at the July 17th, 2026 expiration. So short term, I initially submitted this and I was looking at the higher strike of the 630, but then I realized that's actually too close to where the action is. So although people are seeing the 630 bull put spread on their screen, I want them to just adjust the numbers, and I want to think 530. I want you to be thinking about selling the 540, buying the 530. It's going for 265 and 165. So it still gives you the same net $1 credit spread for putting up $10. So you're looking at a potential 10% return. But what I like about that is it gives the buffer a bigger buffer, about 100 points that the stock could fall down. So I love a trade where the stock can go up, you're right, it can go sideways, you're right, and then it can even fall 100 points and you're right. So if you're looking at that on your screen, I made the adjustment real time on the fly. The 540 put, you're selling it, buying the 530, you're bringing in a net dollar credit, except you get a $100 cushion here.
And I know you always like to have an I'm wrong level. So what's the I'm wrong level here?
Yeah, so the I'm wrong level here is with $100 of cushion built in. You really want to look at that 50-day moving average. You see the stock bounced off it 2 or 3 times, kind of the W pattern. So if it breaks that 50-day moving pattern, then moving day average, then the pattern's broken, and we definitely want to consider taking a small loss. But with 29 days, that would have to be a big sell-off to happen. So that's what I love about this. It can slowly creep down there, and you can see it approaching your I'm wrong level, unless something just comes out of the sky and knocks it down $100. But I don't foresee that happening.
Alrighty, so let's move on to your second pick then. Hopefully not falling out of the sky. Maybe not the best one to make before this one. But we're going to Boeing next. And my last guest was bullish, looking at aerospace coming out of a potential resolution with the Iran conflict. So how are you feeling about Boeing right now, Jason?
So obviously Boeing makes commercial airplanes and defense aircraft and space systems, et cetera. But I like the company. I fly their planes when I fly as well. So we want them to succeed. But there's still questions that surround the company, whether they can, fix production. And in fixing production, meaning you want to put out planes faster and meet the delivery deadlines. But then the question comes in, can they keep the quality or improve quality while they're trying to deliver more planes? That so far has been a dark cloud over this company, which is why the stock has been trading sideways. So I'm not bearish on the stock, but I'm also not bullish on the stock. I think it still is going to trade in a sideways range until the company proves itself.
Yeah, a lot of people waiting on Boeing right now to see what they can. They are increasing their plane deliveries, though. So as you're looking out over the longer term chart here, Kevin, what are you seeing for Boeing?
Yeah, it's been sideways, as Jason called out here, obviously. You've got long range support through here, of course. That's about 140, 135 or so. 265 up above us. Very important level. We've clearly run to it a few times, right? And have pulled back each to the same ledge. Now, what's interesting in the shorter run is that 200-week moving average acting as support most recently. 2 solid support tests. We'll see if that validates anything other than downside risk management opportunity, meaning under 197, 200. Traders could choose to get a little more defensive in nature under that level. But a breakthrough 265 certainly gives us a chance to push back into the 320, which you can see was really important when we fell through it originally, right?
Yeah, and Jason, as you look to trade this name, knowing you're kind of right in the middle ground in terms of your sentiment on Boeing, how are you looking at approaching this for example purposes? And also, are you giving yourself the gift of duration on this one, or is this one also shorter term?
This one's also shorter term. So I'm looking at the July 17th, 2026 expiration on this. I'm seeing this as a perfect opportunity for an iron condor or a butterfly strategy here. And so traders, like myself and anyone at home, you really should love these type of strategies, because when the stock sits right there in the middle and it's range bound with a beautiful support and resistance, if there's no earnings or anything big coming up, this is the perfect play. Well, earnings is July 29th, but the trade I'm looking at exiting on the 17th, you get out before any type of announcement can make the stock spike up or spike down. So I'm looking at a bear call spread on the top end. So buying at 260, selling at 250. You're going to get about $1 net credit for that. And then a bull put spread on the bottom end. So looking at selling a 205 put and buying the 195 put, you're going to get $1 credit there. So if you think about it, you're putting $10 up of risk, and then you're bringing in $2. So you had a potential to make 20% on this trade. The other thing is the stock can't be in 2 places at one time. So you will absolutely keep one of those dollars. It can't be up and down at the same time. But in the perfect scenario, if it stays in the middle, you get to keep both of those $1 credits. And what I love about this is you have about a $20 push to the upside, $20, $25 push to the upside that the stock can go, and you can still be right. And then the stock could also fall about $20 to the downside, and you'll still be right. I love this condor. You want it in that short time frame because you don't want to give a lot of news and things time for make the stock shoot up or down, which again will be out before earnings on this one.
And we're kind of almost exactly right in the middle of that break-even range that you've got there right now. We're at 222.88 today for Boeing. Your last pick I don't talk about too much. Marsh and McLennan really underperforming the market year to date and over the last 52 weeks. So take us through this pick on Marsh.
Yeah, this one was really, when I took a look at the chart on Marsh, I mean, it's just been in a downtrend since I think April of 2025. Stock has just been bottom. I call that the penalty box. When you look down to the right, if you look up, if it's up there's in the winner circle. When it's down and to the right like that is in the penalty box. I'm thinking about hockey, I guess. But this company, you know, they are basically an insurance play. They handle risk. They sell insurance to the insurers. But I wonder with AI and companies like this, like, will they rely less on their expertise and their consultations to manage their risk? And can people kind of plug their data into an AI model and come up with their own risk models, probably better than this outside company can? I don't know if that's the case, but when I saw that chart, it also made me think about their business, made me think about AI. And then had the question is, where is the growth going to come from? And if I can't determine where the growth is going to come from, the market isn't rewarding you for staying stagnant. And so I think, you know, this company continues to trade down until they find a new path of growth, or maybe they implement AI themselves and can show that they can increase their profit margin or do the job better than people looking into this information themselves.
All right, and I'm not sure if Kevin's mic was open when the chart popped up, but he kind of muttered gross at the recent price action here. So I mean, we've got a long-term look where things were looking great, but obviously then in the more near term, we have not seen an impressive chart here. So take us through the technical action.
Well, I think it's a great reminder of why traders need to manage trades. We can't ignore our positions. You had a phenomenal move upward, right? And then when you had the reason to take money off, you should have, obviously, to get a little defensive. It doesn't mean you sell everything, but you start piecing out on weakness potentially. That makes a lot of sense. We've been following the 20-week moving average pretty clearly here now for the better part of the last year or so. Rallies into the 20-day, those have been sold. Bear flags into the 20-day, those have been sold. We just basically completing one right now as well on the weekly. So you've got a continuation move. You've got a 50-week crossing 200-week to the downside, a so-called bear death cross, if you will, on a weekly look. Not fantastic from a trend standpoint on the weekly at all, Marla.
I don't know if we've talked about a bear death cross in the last year in this segment. All right, so Jason, so with that setup here and the potential completion of a third bear flag there just in the near term, how would you look to trade this name?
You know, we're open traders up to new technical analysis and new charts today. That's what's happening, Marley. When I look at this, though, the support, if this continues to fall, support is down near about, looking at my chart, support is down near about 148. So I'm looking at this January 15th, 2027, the 180 strike price put. You were paying about $21 for that before the market opened. Now that the stock is down about 340, you're probably going to be paying a little bit more. Your break even's 159, but basically you got 211 days. I think this stock continues to fall. Again, the break even 159. If it falls down to support where I think it's going to fall, which is 148, that'll put you at least $10 in the money from an intrinsic standpoint. And obviously, if we get there before 211 days, you'll also have some time value on that trade. I just don't necessarily see what's going to turn this thing around. Obviously, from my I'm wrong level, any meaningful break above the 50-day moving average, I'd be cautious of because it can turn around and run up to it. But the long-term chart so far since April of last year has showed it can't break through or hold through that level. So I wouldn't panic if it went back up to it, but I don't even think you'll have to panic anytime soon because today it's headed down.
All right, Jason, really appreciate it. And that was a fun chart. Thanks for bringing us one that was different from our usual setup. I hope you have a wonderful long weekend and have some great weather in Detroit. Jason Brown, and of course, thanks to Kevin Horner for breaking down the technicals for us. Coming up next, we are going to spotlight what's